Hello, everyone. I want to talk to you now about investing in bank stocks, the JP Morgans, the Chase, the Citis, the Bank of America, the Goldman Sachs, the Morgan Stanleys, the companies that do global trade and loans. For one, they pay dividends. So that's a good thing that you get a dividend. They don't pay big dividends, but they do pay a dividend. So you got money coming back to you off your investment no matter what the stock does. If it doesn't go anywhere, you're at least getting the return on investments of the dividends. But the other thing is that the real catalyst is that the banks have traditionally been the leading industry, the finance world, whenever the stock market or the economy takes off. Well, after this COVID, the economy is going to be pretty much hurting. And so they're going to need a shot in the arm from the financial world. And our government is going to set up all kinds of ways for these financial institutions to invest in the quote unquote small companies because they've crushed them already, and to invest in other companies to grow the economy. So anytime a company tries to recover or go forward from where they are, they have to look for off their balance sheet, which is assets and liabilities, and they don't want to use up what assets they have because they need those to grow the company. They want to try to get infusion of more money, and that comes through the liability side of their balance sheet, and that's the loans from the banks. So if they can get more money that way, another way they do is by issuing shares and getting money from investors. But that's really not good because it dilutes the amount of money you own in a company when there's more shares. We'll talk about that later. But the bottom line is the economy needs financing to grow. That financing comes only from the financial institutions. It does not come from government, does not come from really the other people who are trying to partner with you, because you have to, when that occurs, you're basically diluting your earnings capability. You're sharing your earnings with this partner. And so some of the cannabis stocks at this point in time need that help because they don't have the market reach. Number one, they don't have the money, and they don't have the credit worthiness to go borrow money. But if they were in a relationship where they partnered, then they can leapfrog or multiply off that with financial institutions, make them loans. But not just cannabis, all industries. When they're talking about the Green New Deal, they're talking about road constructions, they're talking about funding these cities, they're talking about the monies that are necessary to make loans, to make things work and have a chance to come back. So borrowing money gives you that extra leverage to help you come back. And banks don't give money away. They loan it only to the strong. So that's another thing to watch. So when the banks are making their investments, that tells you where to go. They're not really called investments from a bank's point of view. They're called loans. So number one, not only the cannabis, but the Green New Deal, the construction of the roads, all these things, the battery world, all these places, no matter who grows, they need money. And when they need money, there's only one place to get money. That's the banking world. And traditionally, when the economy recovers, it has to recover because of the soundness of the banking system and the ability of the banking system to move funds into those companies so companies can take advantage of the loans and grow the company. Talk to you later about more investing.